Welcome yet to another lesson. In this lesson, we are covering that is the failure swing strategy that you can use to trade forex, to trade market, to trade currencies, to trade stock, to trade metals, that is gold, silver, bronze, and any market. This also strategy also applies to cryptocurrencies. Those who are trading cryptocurrencies, those who also are trading indices, and yes. So we are not looking at the support and the resistance. So I delete this. We have covered the support and the resistance. We have covered the demand and supply. We have covered Elliott wave. Now we are on a failure swing method. Let me delete all of these objects. Let me delete all these objects. Can even delete all, but I have decided to use that. Okay, I'm going to check on failure swing. And how do we check failure swing on a current market? I want to use the current market. I don't want to use the history that much, because the history will not help you that much, especially when the market is moving as now, is still on Thursday. Let me hide the trade. I hide my trade. I have my trade that is running on these so I will hide the bar. I go to view, then I hide the terminal. Okay. So it's the market is running, and we are doing good. We are doing good so far. God has been good. So before we continue, I will also remind you the best thing you can do is to subscribe, or share this video with other traders, those who may be willing to understand the failure swing strategy. And I move directly to the failure swing. What is a swing? What is a swing? What is a swing? What is a swing? Let me draw that just for beauty. I'm not using it anyway. I'm not using it. So what am I doing? Want to show you a line that an up trade that emerged from. No, I should not draw it as sorry. I'm not going to draw it like that. I will use I will use the trade line. Let me use the trade line on these. Oh, how do you set the trade? It's long since I used this tool. We remove the ray. Where is the ray? Go to visualization, parameters, visualization. Come on. Visualization. We remove the ray. Yeah, that's right. Okay, yeah, sure. Then we do it like this. Now I know you might not understand, but for me, I have drawn the trade line. I have drawn the trade line. Again, I could have drawn this trade line like this. What matters is how you draw it. There is no specific formula for drawing this, but make sure that this line is being touched by the market. That is why it is a trade line. If the market is cutting the trend line, that is now another thing. Okay, I can draw another support zone there. You see, I can draw another trend line up here. Okay, now this market was moving up, 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 up. It came a time whereby it broke the trend line. Here it was above the trend line. Do you understand? Here the market was on the right, at the left side of the trend line, on the left side of the trend line. Then the market crossed and it is now on the right side of the trend line. Are you getting? From the left to the right. Now it is below. It is below the trend line. Now when the market is below the trend line, that means that we are expecting some failure swing. So the swing, the market was going up. The market was going up like this, going up, up and up, but it decided to break that trend line, started running below the trend line, then went up, up, up. Now when it failed, the bouncing time is when we drew this like a support. It started behaving like it is consolidating. We do not trade on a consolidation where the market is trying to find the direction to take and whatsoever. You see? But now whatever that we are expecting that market to go downwards. That's why here we did not place trade even after the market broke this trend line, because what are we looking at? We are using the concept, the forex concept. In fact, I could have told you this earlier. So here I will write sell expensive. Okay, sell expensive. Then here I will write buy cheap, shock low. Okay, buy cheap. Ensure that whenever you are placing your buy, you are buying cheap. Whenever that you are placing your sell, you are selling expensive, and you will never go wrong with that. You will get at least above 70% of your profit, of the win rate, and by the end of the month you will be having something to pay your bills and do 1, 2, 3. So here you are selling expensive. Well, or how do you sell expensive? You follow your rules. Once your rules are confirmed, then you can sell expensive. And in our case, we are waiting for this market to break this zone. After here, this one we identified as where the market was the second, the last high. We want this market to break this high. Let me show you. We are waiting for this market to break this. We are waiting for that market to break this. Then, so here we will have our. So the market danced to these are noise. Then you set your alert. You can set a sell stop if you want, but I don't encourage the sell stop. If you set a sell stop, ensure that sell stop has a stop loss as well. because market at times can go crazy and you can't be found there. But yeah, we say that in the market you do not make mistake. One mistake can bring you down from millions of shillings to from thousands of dollars to zero, to square one. You start again. I have done that many times, so I understand. So yeah, this one is a zone. We are waiting for the market to drop. So after the market breaks this zone, put your put your sell position. Okay, put your sales position. Okay, put your sales position just below. Here we are using a failed swing combined with a breakout. In fact, in our next video, we are going to look at breakout strategy. Breakout strategy. Here is a failed swing. I will explain this. These are just a noise. I am explaining this so that even in other kinds of market you can capture this. So place your sell position here. You can use this to place your stop loss. This is I, so you can place your stop loss here. You can place your stop loss there. Okay, and now you could be riding the market. The market is here. This is a live market. Market is moving. If you check, so the market is moving. It's not stopping. The market is moving. You can see the figures are changing. So here we are expecting market to continue going down. Here we are expecting it to continue going down. Okay, and our take profit can be somewhere here. Our take profit can be somewhere there because this one was the turning point, so we can milk the market up to here. Now I want to show this using simple term. What I mean by failure swing. Failure swing. I will still use this chart. Failure swing. What I mean by failure swing. Okay, let me first delete the objects. Sorry. And my drawings. Okay, I want to show you what we mean the failure swing. We have I can use the earlier term that I was using, the impasse and correction. Impasse, sorry, it's morning. I'm stretching a little bit. Yeah, so the impasse and correction, we can use that. What do I mean now when I say an impasse and correction? We have something like this. This is the market that was going up. I'm trying to make this simpler. Okay, this is we draw our trend line. So this is what we are calling, let me use this one. So that one is what I'm calling the impulse. This one, then the downward something. This is what we are calling And this in simple term, this is what we call so here we have eyes. Let me use another color. I use another color. Yeah, we have eyes, 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 the eyes, the eyes, the eyes, and eyes. So we have laws, 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 and the thing continues. So at this point, the market now starts correcting. So the market breaks this trend line. Now this is what we call the fail. You see? Let me rub this one. I want to use a different color so that you might see what I am saying. Okay. Choose this. We choose that. Should I use that? Easy. Closer. Use purple. Yeah. Purple for ladies. Okay. So I want to use this one to show that zone. This is where the market is. This is now where the swing has failed. So you can say here, this is a failed swing. This is a failed swing. Yeah? Or swing has failed. Swing is failing. So our swing here is failing. Our swing here at that point, our swing is failing. Now the market starts dropping. The market starts dropping. And this one now forms what we call the downtrend. We called it on Elliott wave. Was it Elliott wave or demand and supply? It was demand and supply. Okay. Reaccumulation. Is it a reaccumulation zone? So we check on this, we check on this, we check on this. Now market starts dropping. How can we place a trade here? So we have this one. Then we check the second low, the second the eyes. Now at this point, the eyes here. High. This one did not go above this. Above this. So this one is low. Okay. And we place our trade. Once it turns, gets here. So it is beating the other low. We place our buy here. This is now our buy position. Which color should I use? Is green? Blue? Let me use something different like this. So we place our buy here. We place our sell. Sorry, we are selling. We are selling expensive. Yes, expensive. Cheap. Expensive. So here we place our sell position. So here we place you click on sell at that point. Okay, then your stop loss, place your stop loss slightly above so your stop loss. Your stop loss slightly above you place your stop loss here slightly above this, so this one will be your stop loss. Okay, your take profit, place it, learn to place your take profit at a lot places, but make sure that it is realistic. Many people will you can place your take profit there. Okay, so here is your take profit. Make sure that your take profit is realistic. Make sure that it is realistic. It can be kissed, you know. So here we have your take profit. So in many videos I will be using this as a TP profit. Then we use a TP. So your take profit is here. So, and this one is what I'll be calling SL. So if you see me writing SL, know that this is the stop loss. Okay, and TP take profit. So it's as simple as that. So that is how you identify the swing has failed. Make sure that the low, the highs are below the low. It makes high highs and high high highs and low lows. That is the theory is that the high is it's above the low. Okay, so this one is above this. Okay, is above this. This one goes above this. This one goes above this. So if this one could have been this one, yeah, this one goes and comes below. You see. You see, now this will mean that this one will mean that the swing has failed because it has gone below the previous low. You see, it's not going up. Now it has failed at this point. You understand? So this one must go above. When it fails, now we are trading the sell. The same case applies to buy. Now when it goes down and it fails, we buy. For instance, we have something like this. It's going down, we are going down, we are going down, we are going down, we are going down, and then we come, we start going up, up. Okay, now at this point, this is where our swing failed. This low did not go below this low, so our buy position will be here. We shall place our buy here. Just there, we place our buy. So our buy is there, so we place our buy there. So that is as simple as a failed swing. That is the simple strategy we use in failed swing. Very good, especially in cryptocurrencies, and again, when you're trading metals, when you're trading stock market, this has been proved as one of the effective strategy to check when the currency is losing value, and yeah, when aren't knowing what to do, especially when you're trading stock, when you're trading currencies as well, and whole markets. Okay, in our next video, in our next lesson and video, we will check on breakout strategy. I'm compressing the entire forex, something that you should learn in 3 years to just a few minutes, and you have the entire concept of everything. So yeah. It may look simple, look simple, but identifying those stuff requires you to look at the market very well, especially if you're a beginner. But someone like me, I'll get into the market and they see this is a failure swing and that and that. So spend much time in the market doing analysis. Don't spend time trading. Analysis takes time. Trading is just a second. Okay, don't keep on watching your trades. Trade and go to the beach, enjoy yourself. Place your trades, go to the beach, enjoy yourself. Place your trade, walk around, drive around, and check your trades away at an interval of like at least 1 hour, 2 hours, or 3 hours, or 4, or even a day. Like me, I check my trades morning and afternoon. Morning, afternoon, evening, or at night, or sometime I forget. Yeah, that is how relaxed I am. So we move to breakout strategy, a very good strategy. Don't miss this. Check how to trade breakouts, especially this one. Now I will go to pound. I will analyze this using pound. So let's meet on in our next lesson, which will be a breakout strategy. Breakout. Let me delete all these objects. Delete these objects. So our next video will be on breakout. So our next video will be breakout strategy. This one we will analyze it on GBP USD. GBP USD. Yeah, we will check on that, or even we can do it on GBP and Canadian dollar. GBP, that is pound, Great Britain pound, and the Canadian dollar. Okay, we use yellow. So this one is our next lesson. Don't miss out. It's a very interesting stuff. Okay, let's meet there. Ensure that you subscribe before you leave, and click that bell so that you may get that lesson. See you.